afternoon to all you wonderful traders, all you beautiful ladies, and you handsome gentlemen. Welcome to our daily live stream brought to you by DCFX Asia. And I am yours truly, Abe Layman, coming from Central Java, Indonesia. Live! Alright, so welcome to the new week, I think the third week of the middle of the year, the month of June, Monday, of course. And well, what we're gonna do today is we're gonna see what's happening on this coming week. As we all know, the US dollar got quite a beating. It was declining for the whole week of last week. So, after the ECB rate hike, the dollar took a plunge, and then Bank of Japan's rate announcement remains as status quo at minus 0.1%, and not much else happening last week. For this week, we have two more central banks announcing their rates, and economists as well as analysts are predicting that these two central banks, which is the Swiss National Bank and the Bank of England, both of them may want to go for a rate hike. So, how will that affect the US dollar? Well, we'll find out. For that, let's take a look at the economy. Okay, here we are. Today, June 19th, Monday, the US will be having a bank holiday, which is they are celebrating Juneteenth holiday. Well, you can Google it and find out what Juneteenth is all about, but it will be a bank holiday. So after the close of the European markets about midnight or 1 a.m. your time, things will be quite slow. So if you want to trade, well, trade easy. Okay, so just beware that after midnight, things will not be as choppy or as volatile because the Yankees are having a holiday today. Alright. Oh, then on Tuesday, nothing much happening except for the RBA, Reserve Bank of Australia, having its monetary policy meeting, and they will issue the minutes of the meeting to keep us informed of what the RBA would want to do with regards to the rates. Then, on Wednesday, in the afternoon, we will have the pound sterling CPI year on year, currently standing at 8.4%. The expected number is at 8.4%. It is expected to be slightly lower than the previous number of 8.7% because they want to see the inflation number goes down. Alright, so well, we'll find out later on Wednesday. And then Uncle Jay will need to testify to the Capitol at about 9 p.m. Then on Thursday in the afternoon, before we go live, the Swiss National Bank will issue the policy rate, and of course the interest rates, what the SNB will want to go. Well, it is expected that the SNB may want to hike it by 25 basis points to a level of 1.75%. Currently it's running at 1.5%. Will it be the same, and will the market react accordingly or the other way around? So we'll find that out on Thursday. Prior to that, there won't be any other details of the Swiss National Bank. There will be a trade balance on Tuesday. Then that's about it. Then on Thursday, we have, after the Swiss National Bank rate policies, next is by 6 p.m. my time, 7 p.m. your time, the MPC official bank rate quotes and the policy summary plus the official bank rate of the United Kingdom, uh, Great Britain pound sterling, currently standing at 4.5%. It is expected to go up by 25 basis points to 4.75%. Right, and then the weekly unemployment rates during the New York's opening will come after that. So expect a Thursday to be a rocking and rolling day. It will be a high volatility day. Uh, just be extra careful when you want to trade. And then again, Uncle Jay or Jerome Powell will need to testify again for a second day of hearing. And then on Friday, not much of the pound sterling or Swiss, but more of Eurozone. Right, the flash and services manufacturing and services PMI for France, German, and then overall of Euro area, and of course the UK. And also after the opening of New York, that will be the manufacturing as well as services PMI. That could be interesting. So it will be a slow start of the week, Monday, with not much data, with not much high impact data, not much news, and with the Yankees or the US having its holiday, it will be a very technical sideways movement for today. So I have not opened an account yet. I'm not opened any position yet because the range and the chart setups are not there yet that can interest me. So it will be a slow, easy walk in the park for today. But coming Tuesday, I'll be starting to heat up a bit. Then Wednesday, uh, it will be an interesting day because especially at night when the New York opens, we have several members of the FOMC giving their point of views or giving interviews and telling them what the Fed is going to do. Will the Fed decides to follow the ECB to go for another rate hike in July? Yes or no? Well, they got a beating, the US dollar. We'll see that technically later. But looking at the fundamental side of things, let's share some news with you. Bets are soaring for UK interest rates may unravel over 30 hours. Well, the inflation rate at the moment is standing at, hang on, let me take a look. 8.7%. It's not nice. It's pretty high, right? We are in the 2023 first semester. It's at about 8%. Day one or BOE would like to see the rate going to 2% within 2 years from today, from now. And they expect the rate to come down first quarter 2024 to be about 4%. Well, it is currently above target because the February 2022 or November 2022, their target is around 4%. Currently, it's up above that. So we've got a lot of work to do for the BOE to decide what's happening. And of course, they'll come back on Thursday to announce their rates. And well, you know the website. It's at bnnbloomberg.ca. You can take a look at that. You can read for yourself. Let's take a look at another news, which is this. Interesting. This is mark to market. Greenback looks set to bounce after the recent drubbing. Really? Well, uh, based on the numbers and whatever has been discussed, Fed Chairman Powell, he needs to update to Congress. That's why he's gonna have the testimonies for 2 days. That's Wednesday and Thursday, and then they'll decide whether it's high time that they need to increase the rate again. Well, we have to see. But most economists are looking at July's rate being up by another 25 basis points. Well, that's coming up later. Japan is running on status quo even with the CPI figures. The BOJ is pretty happy with how the Japanese economy is doing. They are not going to have any changes at the moment yet. The Eurozone is expected, Christine Lagarde hike up the rate by 25 basis points to a level of 4.0%, where its current inflation rate is standing at 6.1%. So, well, they've got work to do for sure. Well, we just wait and see how they react to it, and that's it. That's about all at the moment. Then let's take a look at what's happening on the technical side. Hang on, let me search for see if my chart is in my screen. One moment, please. Okay. Why do we always take a look at the US dollar, you may ask? Well, ladies and gentlemen, whether we like it or not, the US dollar is still the base currency for all trades around the world. Although it's about 30% of the physical trade, but between banks, between OTC trades, most of the counters are against the dollar, except for cross rates. Even gold is priced in dollar. So, what affects the dollar affects gold for sure. And even oil, when you trade oil, is also based on the dollar. You trade Bitcoin or Ethereum or Litecoin or cryptos, it's also based on the dollar. So, we need to know what the dollar is going to do. How healthy is the dollar? Is it weak? Is it strong? Is it having a flu? Or is it happy playing fiddle? Or maybe they are just too lazy. That is why we need to analyze the dollar. Okay? So, what we have here is the daily chart of the US dollar. Let me shift this so that I won't be blocking you. Okay. Now let me enlarge this. Now, what we have here, this is a spin top candle. A spin top candle below the bottom band is an indication of a bullish reversal. Just one single candle. But if we take this bearish candle plus the spin top, it becomes a bullish harami. So, a spin top and a bullish harami below the bottom BB, 20 BB, is a bullish reversal, and today it opens at a low point of 102.211. Currently, it's trading at 102.400. So, it is the start to confirm of a bullish reversal. Can it last? We'll take a look at the smaller time frame at H4. Why do I use H4? Because H4 allows me to analyze based on weekly patterns. Right? H4, you see, This vertical lines is a period separator, meaning a period of 1 week. So this is Friday. The last 6 candles, 2, 4, 6. These are the 6 candles on Friday, which was moving a lot of sideways with slight inclination on the bullish side. Why does it happen that way? Because if you look closely, there is a spin top below the BB20, and then below that BB20 there is a monthly channel cross plus a dragonfly. So having a dragonfly, it is a bullish reversal. Dragonfly will fly up, right? So this is the first initiation of a bullish reversal. So will this bullish reversal continue? Possible, because at the moment on H4 chart, prices have gone way past the momentum line, which is the MA10. Now it's going to meet the mid band of 15 BB, and also there is a weekly Fibo at 102415. So having a weekly Fibo plus the center mid band of the 15 BB, it can be a bit tough to break. It will take some time, and with the Yankees or the US on holiday, may not have enough momentum based on H4. So let's take a look at H1 then. Right. So H1 is telling us that the bulls and the bears are not in, but only the crabs are around. Because it has been moving sideways since the morning, since the opening of the Pacific plus the Asian hours. The range is very little. It's only about 200 points. Very, very small. And at the moment, it is difficult for the dollar index to go up because there are two Fibos, weekly and daily, plus the top band of 20 BB. So you have three resistance converging at that level. It may be tough, so it might want to pull back a little. It will go sideways, but take heart, because there is the yearly Fibo at 102.330 that is going to act as a support. But now you take a look at the momentum. See, the MA line is above the 15 and 20 BB. This is a sign of bullish momentum, but prices are having tough time pushing through 102.425 or 102.420. Why? Because you have two Fibos, weekly and daily, plus the top band of 15 BB acting as resistance. Take a look at M15. Alright, let's enlarge this. Wow, too big. Okay. It may want to break, it may go sideways. There's two ways to it, but coming down, I have doubt it will come down. Why? Because you can see the trend ribbon. This is MA125, this is MA100, and this is MA75. You see, on the left, the gaps between the moving averages are huge, but on the right, they are being compressed. It is an early sign that the bearish trend is going to flip to a bullish sign. And the momentum line is telling us that the bullish momentum is in the market. It is waiting for the right time to push through. So it is going sideways with slight inclination to the upside. All right. For the lovers of greenbacks, for the people who love the US dollar, I love US dollar only for one reason, because I get paid by the dollar. Anyway, so it is good news a bit, but well, we have to take a look. We have to monitor this. And today's Monday. Don't expect much movement. It may spike up or it may spike down because of thin volume. So better not get caught. Trade things or trade asset classes that you're comfortable with. You can go scalping. You can go for scalps. Scalping is okay, but maybe later after the lunch hour in about 2 hours time, where New York is supposed to open, but it's not gonna open today. So after lunch, maybe the Europeans have uh, more savvy to trade. Then you can see some good movements later. But as for now, it looks very quiet. As you can see, it is laying flat based on the dollar index. Okay, so we need to analyze the dollar because it is the base currency for most of the asset classes that we want to trade, especially gold. So knowing that what the dollar is going to do, whether weak or strong, from there we can gauge whether the action or the reaction of our asset class against the dollar is going to work in our way or not. Okay? Right. So now let's say hello to our audience. Oh, there is a poll question that you guys may want to answer. Will the US dollar rebound this week? Yes or no? Looking at the daily chart, possibility. Looking at the weekly H4 chart, yes. Looking at the H1 and smaller chart, yes. But the yes is pretty long, yes, because it's not gonna be immediate. It may take a few hours or maybe tomorrow or Wednesday before it starts to go up. Well, and if you trade USD CHF or the Swiss dollar Swiss, if the Swiss is strong, USD Swiss will come down. But if the Swiss is weak, it's the other way around, right? Will that affect the dollar? Well, we have to wait and see how the market responds. See, ladies and gentlemen, please bear in mind whenever there is a high impact data, right? My advice is avoid entering the market during the release of the data because it is beyond our control. I mean, definitely. Why? Because the market reaction during the release of the data, it's pure gambling. It's like throwing the dice, right? But after that, before and after that, we can more or less predict where it's going to go. During 15 minutes before and 15 minutes after that half an hour, it's better to stay away from the market, meaning do not have a position in the market, but you can watch. Watch where the market is going. It will definitely go up, go high, go up, go down. It will move quite frantically, but after that, it stays and it starts to move normally, like what that it used to be. So there is a time when we look for trade setups. Only then we enter the market again. Okay, bisa. Why? It's more for capital preservation. The longer you are in the market, the more opportunities you have to trade. Sometimes you don't have to trade every day. Some people don't trade every day. They trade maybe 2 3 times a day when they feel comfortable and when the trade setup that they were waiting for presents itself. See, the keyword is waiting for. So trade like a sniper, not like a machine gonna. No, we can't do that. We can't afford to do that. Even the big boys, they don't spray like that. No, they don't. They will go when there is a good trade setup. Then they go by batches. One batch of 20 lots, then another batch of 20 lots, 20, 20, 20, 20, maybe up to 300 lots. They can afford to do that because they are trading by the billions. Me, I'm a retail trader. I go in one lot at a time. One lot at a time. If the first lot is making money, only I put in another one. And maximum, at any one time, I only have a maximum of 3 open position of 3 lots, 1 lot each. Why? Because it's for capital preservation. Yes, even you make it good. But if you lose, then it will be nice, right? So preserve capital, trade carefully, do your homework, analyze. If the timing is wrong, it's okay. There's always later. If things are not right, if your mind is not synchronized with the market, then there's always tomorrow or the following day. See, and excuse me, analyzing the market is basically synchronizing our thinking process with the market's thinking process. We use indicators, we use charts to tell us where the market want to go. Let the market tell us where it's going, then we follow. We don't fight with the market. We are very small compared to the big boys, man. The difference is like a different planet kind of thing, like different about night and day. So, uh, uh, my advice is always to relax, learn as we go, protect your interest, protect your investment, especially yourself. Take care of yourself. Have a healthy body so that you can have a healthy mind. Because tomorrow we'll discuss the psychology, market psychology, and as well as trader psychology. If you want to know more about trader psychology, traders mindset, stay tuned tomorrow. And that's it. Okay, now let's say hello to our audience. Mr. Go Walker, hello. Hello, Mr. Go Walker, welcome back. Welcome back. And Desire, hi Desire, welcome back. I hate Japanese yen recently. It's not coming down. Just you thought it is now gold. Well, see, yeah, Japanese yen not coming down because the Japanese yen, see, they want to have a better trade balance, meaning they want more exports. So if the yen gets stronger, then the exports may suffer. So Ueda-san and the BOJ wants to retain as it is. So yes, it has not been coming down, but maybe later in the week, what happens to the dollar's reaction to SNB and the BOE, the Bank of England and Swiss National Bank coming Wednesday and Thursday, it might change that. All right, Desire. Well, gold is always been the prima donna. Sometimes it works technically well, so we trade technical. Well, if for me to understand the fundamental, number one is because it's my job as an analyst. Number two, I need to know the fundamental side of things. Why? To know the underlying facts of the current movement, right? Especially on a macro economy level. Okay, so if you don't understand much, I mean, you're not into the economic way of things moving. Well, you have to learn a bit, right? Supply and demand and all that jazz. Uh, well, it's fundamental. But when you trade, it's always technical. That's where you find the levels of entry and the levels of exit, as well as your SL and your target profits. Jenny, hello sir. Hello Jenny. Welcome back, Jenny. Smith JT, close sell position? Well, I'm not sure. I have no open position. So Smith, right? Welcome back. I think goal 1956 is possible. Oh, analyze, start to answer your question now. Leave your question here. We'll answer you. Oh, okay. That's for the audience. All right. So, right. Okay. So, goal is always the prima donna. So let's look at goal. So, Gold Walker think that 1956 is possible. Take a look. All right. Gold has been hammered down, or rather hampered down by the bogeyman, which is 1960 to 80. There. This is the yearly Fibo, and it has been a tough resistance since uh, late last month, right? And now we are into our third week of June. Gold has been trying hard to push up. There is a wait. Am I blocking you? Sorry. My bad. Let's shift. Okay. Uh, excuse me. And looking at the momentum line plus the midband of 15, 20 BB plus MA 75, all congregating at that level, it may look like a tough support. All right. Please bear in mind today is Monday. US market is closed, going to be closed, and Europeans are not known to be hard workers on Mondays, like most of us also. So I don't expect markets to be volatile today, but it may be going sideways with slight bullishness. That's based on the daily chart. To go down, well, we have a support waiting to be tested at 1940.62. So go over, you think 1956 is okay to buy, possible, but wait, let's take a look at a smaller time frame, right? So as based on the gold daily chart, it is going sideways, it is crabbish, it may be ranging, let's say maybe $30. I doubt, because today's range is only $6, so small. Okay, take a look at H4. Right, this is H4. You can see that gold did a recovery on Thursday, late Thursday, and then on Friday it tried to push a bit more. The shooting star appeared at the bogeyman at 1962.80, and after that it went down because where the bogeyman is, there's also the MA 125. So that is a tough resistance. Yes, to pass through peak is okay, but to close above that, the bogeyman say no can do. You go down. So the golden bulls came back, came down. Then the bears took over. The bears want to dance its way down, but cannot because there was the weekly Fibo as well as the MA line, the momentum line, holding it back, supporting it. And now it tried to go up, cannot even reach the MA 100, MA 75, not supporting it at all. Momentum line say, go la. So what's supporting now, what's supporting gold at the moment is just the weekly Fibo as well as the mid bands of 15 and 20 BB. So it might want to slide further. So if you want to buy at 1956 or maybe you want to sell at 1956, there is a possibility, but H4, I wouldn't enter the market based on H4 unless I'm doing swing trade. But it is too late to be in the market based on H4. Let's take a look at H1 then. Excuse me. Okay. H1 looks like it is mixed. The demand from the buyers and the pressure from the sellers are more or less even out. Why? See, these three bearish candles, even the current H1 candle, this current hour with about 25 minutes to go, is telling us that the bears are in town because the bulls tried to push two candle for 2 hours it pushed. All right, that was during the Dubai hours and the opening of London. Sorry, it was during the end of the Asian hours and the opening of Dubai. It went up, tested top end, but the momentum line says that no confirmation. It only crossed the 15 BB. Wait, am I blocking you? Okay. It only crossed the 15 BB, cannot cross the 20 BB, and prices start to slide down. Okay, you can take heart that there is a support at this level, 1953.60. Okay, this is based on M30. Let's take a I'm supposed to show you H1, right? My bad. Sorry. Okay. H1 is more potential of a bullish reversal. Why? You can see that the trend ribbon on the left side, it has got big gaps between the moving averages. On the right, it is being compressed. So after compression, what will happen is when the bulls starts to come back, the bears will stay away, the crabs will also stay away, then the bulls will make the trend ribbon flip, and we may see the start of the bull swing starting from 1953, 18 or 20. Why? Because I expect this bottom band of BB20 to be at this level. This is the following hour from now. So after 4 p.m., when prices are around 1953 and not lower than 1950-50, it is a safe spot to start to go long on gold. Long meaning you buy gold, but please wait for the chart setup. Oh, sorry, the trade setup. Look for the candles, and also look at a smaller time frame between M15, M30, and M5. If when the trade setup presents itself, then by all means trade. If it doesn't and you're still not sure, when in doubt, stay out. When you know when you know what the market is going to do, you have the confidence that you know what the market is going to do. By all means, trade. But whenever you are in doubt, it's best to stay out. Okay, so from each one, let's take a look at M30. All right, M30 is telling us that yeah, the bulls may not be here at the moment. It's still the bears. And like I said, there is a support around here, 1953.20, and there is a channel cross between the daily and the weekly. So it may shake, or rather, it may want to form a double bottom at this level. Then at about 4:15, about half an hour later, by the time we go off air, it might show a double bottom. Then there is a possibility that the gold might rebound. And when that double bottom occur at say around 1950 to 60, the target will be 1965. Not bad. $18, right? $17 a jump. Not bad. $27. Sometimes my math a bit out. 65 minus 58 is $8 lah, bigo. Sorry, so it's $6. Well, that's the target when there is a double bottom, because the height is always the target. This is the height when the double bottom occurs, at, let's say, 600 points or $6, it goes up by $6, and well, we are looking about 1965. Well, will it happen? Man, I'm no genie. This is what is it's telling me, and based on my assumption, I can be wrong. So it's better to wait for the trade setup to appear, then you decide what to do. Okay. Next, M15. All right. M15 looks more promising. Why? Because the sorry. My bad. Okay, I'm make sure that I'm not blocking you. All right. So what's happening is, remember the M30 we're waiting for a double bottom. M15 is telling us that there is a likelihood of a double bottom. Why? Because the weekly and daily channel crosses at this level, 1915 to 45, and this is where the bottom band of 15 and 20 BB is going to meet. So when you have more than 3 indicators congregating at one level, it becomes a tough support or resistance. So, well, we have to wait more than excuse me, you gotta wait for more than half an hour or maybe an hour. So maybe before they go for lunch, after the European lunch, which is about dinner time, our time, then it start to move. So as of from now till about that time, it's gonna move sideways a bit, bearish. The range is pretty small. It's like I said today, the range is only $6. It's very small, and it is quite normal for a Monday's trade. Okay, so that is M15. M5. Uh, M5 can look a bit scary, but it is good to know the smaller time frame. Why? You see, you will need about 1, 2, 3, 4, 5 more candles to reach this channel cross. The weekly and daily channel cross, this is going to be a tough support because history has proven that. So it may work, it may not work, because there is a channel cross here. It doesn't work, but it took, at least the candle took a break. Stop for a while, then go down, try to go up, cannot go up because the trend ribbon say it's time to go down. That's why it's gone down. So in about 20 minutes, we have to see what's happening. As of now, it is testing the daily channel. Will it succeed? We have to wait and see to know whether the bears will be in power. Okay. Well, looking at the trend ribbon, yeah, it is bearish. But looking at the support and looking at the bigger time frame, there is a potential of a pullback or of a reversal. Okay. So we have covered dollar index and we have covered gold. What will be your request? Just let me know. Let me just put this back in order. And let's see who else are in the audience. Gold Walker, New, good evening, Mr. Rabi. Hello, New, good evening. Welcome back. Good to have you. Glad to have you. Happy to have all of you present. All right. So, since we are going to do the forecast, let's go back to gold and let's focus where gold is going this week. All right. Now, looking at the daily chart, gold has no clear direction. It is going sideways, and we are seeing that the Bollinger Bands are being compressed and the trend ribbon is all flat. So we can expect this to go sideways more until the announcements from the central banks may change that. That will come somewhere in Wednesday and Thursday, on Wednesday and Thursday. All right, so I expect gold to go sideways. So if the dollar index can recover, then gold might go south a bit because gold is having a tough time being stopped by the bogeyman at 1962.80. So, well, the bullishness is not here yet, right? So every time you have a bullish candle followed by a lot of bearish candles, then another bullish candle, then it becomes a shooting star. And today it is a bearish day. So, but even if it's bearish, but once it hit the MA 100, it might want to rebound. So it's pretty tricky for gold at the moment. Okay, so that is gold for you. Then let's take a look at, for those of you who wants to know a bit about the Bitcoin, let's take a look at Bitcoin on the daily chart. Okay, now Bitcoin has got a potential of a bullish reversal. At the moment, Bitcoin is moving upwards and it is being supported by the MA 100 and of course the mid band 20 BB. But if you look at the momentum line, it already crossed the 15 BB. Now it needs to cross the 20 BB mid band, then it may want to go higher. Well, for this week, Bitcoin may want to hit up to 27,542, the yearly Fibo. There is a possibility. So I'm bullish on Bitcoin. All right. Then somebody did ask about Euro. Smith JT, Euro USD is an uptrend. Is it? Good question. It's a yes and no. Let me explain. Okay. Let's take a look at Euro. Now, Euro is in an uptrend, but it has reached an overbought position. Okay, let me explain. Let me enlarge this so you can see a bigger picture. See, Euro's movement got triggered by the ECB's announcement that there was a rate hike. It has gone through a rate hike, and the European bulls came charging. But Friday, it lost momentum, and we have a spin top. Some may say this as a spin top. Some may say this as a gravestone doji. But I call this as a turning point. It is a gravestone doji with the candle above the top band. See, when the candles are above the top band, it has got power, and it is a bearish reversal. See, doji's spin top, it is a turning point, but it has to be confirmed. So in other words, when we see a doji, it is the end of the trend. It's like driving, you see a doji, it's like a red light. You brake, stop. Then you decide whether you want to make a U-turn or not. See? So what's happening to the Euro USD is it is trying hard to recover its loss for the month of May of 4,500 points. And how much has it recovered? Only 3,300 points. So we are looking at about 60%. less than 70% retracement. It is a healthy retracement. So the bargain hunters that came early June may want to do profit taking these few days. Okay, so this pullback may bring the euro down to about this level first at 108617. Currently it's trading at 109174. So yeah, it might want to slide down, then they decide where it's going to be. Looking, if you say that it is an uptrend, yes, you are right, because the trend ribbon, see, it was big gap, then becomes small gap, but you look at the angle of inclination, see the MA75 is turning away from the MA100, and the momentum line MA10 has bid goodbye to the mid-band of 15 pp and the mid-band of 20 pp. Okay, so when the momentum line is going in line with the top bands of 15 and 20 pp, that is a good bullish sign. So the bullish momentum is in euro, but looking at the daily chart, it has gone into an overbought position. So it may want to pull back to a level of 108623. Why? Because over here, this is the 50% mark of May's high and low, and also there is a monthly channel cross. So remember, when we have more than 2 or 3 indicators congregating at one level, it becomes a tough support or resistance. This is going to be a tough support. So for those of you who wants to short the euro, yes, you may, but still, again, daily chart, we don't trade based on daily chart. Oh, I don't trade based on daily chart. I trade based on M50 chart. Okay, so let's take a look at H4 from the daily to H4. Right, it is a pullback. Yes, it is an uptrend. And to confirm it is an uptrend, you see the trend ribbon. It was a bearish trend. Then on Friday it flipped, and this morning it is clear. It is the initiation of a bullish trend. Remember, lagging indicators only form after the price has moved. So when it is pulling down, the lagging indicator won't tell you that it's coming down. No, it won't. Later, because you are looking at 15. This is MA75. So 75 candles away, then you calculate average. Well, the momentum line have not cut the mid band of 15 pp. What more with the 20 pp? So this pullback may want to bring euro down to about 108800. Auspicious number 108800. That could be a good entry to buy euro, because yes, it is an uptrend, but even though it's an uptrend, we need to wait for a pullback when we want to enter buy, because we don't want to chase the market. Let the price come to you. So we wait until it reaches to that level, and then the trade setup shows us that yes, I'm going up. Then we enter the market. Okay, Smith, right? Right. Yes, Smith. Euro is in an uptrend, and for today it is safe to buy euro, but wait until it has pulled back enough for it to rebound. Okay, so that is euro for you. I am bullish on euro, but I'll wait until it shows a reversal signal, then I enter. Based on H4. Now look at based on M15, it has a clearer picture and a clearer target of where it's going. See, I always look out for things like this, where the channels, we have a channel crossing. Let me shift this a bit more. Right, and this channel is going to happen in about 45 minutes time from now. That's about 4 more candles actually, 3 more candles. So let it slide, then see if this level where the weekly and daily channel cross plus the monthly channel all congregate around here. When this proves to be a tough support and then it presents a bullish reversal, only then I will want to enter euro. Okay, in the meantime, there is no clear signal and I don't want to enter the market because there's no signal. Okay, I hope that answers. Smith, who do we have next? But honestly, when I look at the daily chart, I am not too confident of going long on euro. Maybe tomorrow, but not today. Okay, so there is a word of caution. Yeah, well, you want to sell, it's a bit too late, so it's better to wait. Okay, so since there's no more question and we are about to come to an end, and ladies and gentlemen, tomorrow I'm going to discuss about psychology, and it is the most important thing in trading. No point of having the best system in the world when we forgot about God's creation, which is what we have up here and here. See, it is combination. This is feelings, but it is more of the intuition, and this is the processor where we get our information, and then the thought processes plus our intuition gives us the best tool to trade. People may say robots work better, expert advisor work better. Yeah, right. If the market is efficient. Unfortunately, the market is not efficient. The market goes where it wants to go. Why? Because humans are the one who moves the market, and humans are the one who create the robots or the expert advisors. So, who is the better thinker, the robot or the human? So, it will be an interesting event tomorrow. We'll discuss about the psychology of the traders, how to have a trader's mindset, how to create your own trader's mindset that fits your own psychology, because different people have different style of thinking and different views on things on life. So it's not one size fits all, right? But I'll try and give a general picture, then you'll decide what is most suitable for you. All right, so come back tomorrow. We'll discuss about the psychology of trading. And meantime, thank you for your time, ladies and gentlemen. Thank you very much for attending our event, our live stream today. Hope to see you again tomorrow. And if you think we are doing okay, please come on, you my friend, give me some thumbs, baby, give me some thumbs, and let your friends know about us. Get them to subscribe, get them to watch our videos. We always give tips, no tricks. There's a lot of tips, but no tricks. I'm not a magician, so I cannot do tricks. I tell it like it is, no hype, nothing. Right? So, but yeah, I like to have fun, some jokes here and there, but just to level things up. And anyway, time to go. Thank you for your time. Have a pleasant evening ahead. If there is no clear picture, don't trade. Take a break. Enjoy your evening. Have a nice dinner with your loved ones. Spend some romantic time with your loved ones. If you don't have a loved one, it's okay. Spend your time with yourself for me. Anyway, gotta go. Bye bye, everyone. Thank you. Have a good one. See ya. God bless.